James White is the investment market researcher at Colonial First State and joins us now from Sydney. James, would you say that Australia is the safe haven of investment?
Oh, look, I think Australia looks like an outlier at the moment in the global market. I think there are a number of factors that sort of drive that. Obviously, at the moment, we've got all the problems and issues in Europe. I think that on top of that, we're looking at some stage in September that a further extension of quantitative easing will occur in the US. And then the actions of the Swiss National Bank and also the Bank of Japan to try and protect their currencies and try and halt some of their rise paints Australia in a very positive light. So I think that in many regards, including sovereign debt or the low level of sovereign debt, the health of the banking sector in Australia, despite what the CDS market is saying about Australian banks, I think suggests we are in quite a sweet spot at the moment.
Is therefore Australia one of the least exposed to the European, also the US debt crisis?
Oh, look, there's no doubt about that. I think obviously we are very closely related to China, and I think people probably misunderstand in a way just how small Australia is, and therefore how much it can be exposed to one market but also entirely underexposed to other markets. I think if you look at Australia's export profile, it is all about North Asia. And one of the things, I was recently travelling in North Asia, and one of the things that really struck me was just the lack of price sensitivity around some of Australia's key commodities, particularly coal, coking coal and iron ore for steel making. When I was talking to a Japanese car maker and saying, well, what's the impact of the rise in steel prices over the last 2 years? The comment was, well, it's not really very much. In terms of the value of a car, the rise in the price of steel has added about $250 to the price of a car. So a lot of this, what Australia is sending up to Asia is a very low value product that is transformed into something extremely valuable and that has a life well past that initial period of consumption in the steel making process. So I think that adds an enormous amount of growth to Australia. The problem we've had in Australia over the last 5 to 6 years is coping with that growth and coping with the reallocation of resources that comes from the very strong demand in China. And one of the really interesting stories I thought that came out of the reporting season in Australia is that Goodman Fielder, who bakes bread, said that it costs more to deliver a loaf of bread in Australia than it costs to bake a loaf of bread, despite the fact that we've seen rising wheat prices. And I think that really reflects this structural change in Australia, that the high cost of that structural change. Effectively, it's saying we've got creaking infrastructure in a lot of our urban areas, and on top of that, a truck driver can go offshore, go up to Queensland and earn $150,000. So you've got wages feeding into that whole process. So Australia is facing this problem where, you know, you've got very strong miners and they're leading the market today, but the domestic-oriented sector is really facing rising cost pressures.
Do you think, James, that Australia is too reliant on Chinese growth, and if growth slows down, that will also affect the Australian economy and clearly Australian growth?
Not at all. Well, look, I don't think we have a choice. I don't think there is any other opportunity for Australia other than to accept the growth. You know, we've got to remember that the growth that Australia, you know, we're a market economy, and at the moment the investment that's occurring in the north of Australia and the west of Australia is private sector led. Effectively, and that's what Australia wants to do. It wants the private sector to be making capital allocation decisions. We have no choice but that. I think where policy is important in Australia is really about improving the quality of life. I think we need to actually take a leaf out of the Chinese playbook, which is very much about lowering the cost of living through very strong infrastructure spends. And I think what needs to happen is the government probably needs to spend more money investing in transport and energy and water infrastructure in the southeast of Australia, and trying to lower the cost of living for Australians who aren't as exposed to the higher income mining sector.
Thanks for joining us. James White there, very of course, pro-Australian there, as he should be, being an Australian. James White there, investment market researcher at Colonial First State.